Your business can be busy, sales can be strong, you might even be making a profit, but cash can still feel tight. In fact, profitable businesses run out of cash all the time. It's one of the most common reasons businesses collapse. So why does this happen? Hi, I'm Marie from Next Steps for Business. I'm a qualified accountant and business owner, and on this channel I help small business owners understand how their business really works, from sales and marketing all the way through to profit and cash flow. So let's look at why cash flow can feel tight even when sales are good. Your business can be busy, sales can be strong, you might even be making a profit, and yet the bank balance still feels tight. This is something many small business owners experience, and it can be incredibly frustrating because on paper the business looks healthy, but in reality cash just isn't there when you need it. So in this video we're going to look at why cash flow can feel tight even when sales are good and what's actually happening behind the scenes. One of the biggest misunderstandings in business is the difference between profit and cash flow. Put simply, profit is what's left after costs, cash flow is when the money actually moves. For example, you might invoice a customer for £2,000 in April, and that sale will appear in your profit and loss account in April. But if that customer doesn't actually pay you until June, the money isn't in your bank account until June. So your accounts show profit in April, but the cash doesn't arrive until June. And that's how businesses can look profitable on paper while still feeling tight on cash. Another way to think about this is profit tells you whether the business works and cash flow determines whether the business survives day to day. Most cash flow problems are actually timing problems. Money often goes out of the business before it comes back in. You might buy materials, deliver the work, then send the invoice, and then have to wait 30 days to get paid. In the meantime, your expenses still need paying. This can quickly create pressure. Some of the most common timing issues businesses experience are things like customers paying slowly, invoices being delayed, expenses needing to be paid before customers pay you, VAT or tax payments not being planned for. And when these things combined, even a busy business can feel short of cash. This is also why growing businesses often feel tighter on cash. When a business grows, costs usually increase first. You might spend more on materials, stock, marketing, or staff before the extra sales actually arrive. So the cash leaves the business first and the income comes in later. That's why being busy in business doesn't always mean financially comfortable. The faster a business grows, the more cash it usually needs to support that growth. One of the simplest ways to improve cash flow is reducing the gap between doing the work and getting paid. There are a few simple ways businesses can do this. Deposits are one example. Taking a deposit for work before it begins means you're not funding the entire job yourself. For longer projects, milestone invoicing can help as well. Instead of invoicing everything at the end, you invoice at different stages throughout the project. Another important one is simply invoicing quickly. Customers can't pay you until they receive an invoice. If invoices are delayed by days or weeks, that delay immediately pushes cash further back. Technology can help with this as well. Many accounting systems allow customers to pay directly from the invoice. And Xero actually reports that businesses using online pay now buttons on their invoices can get paid up to twice as fast, simply because customers can pay immediately instead of setting up a bank transfer. One simple habit that can protect your cash flow is just paying attention to what's coming in and what's going out. Many small business owners only look at their bank balance today, but cash flow problems usually start weeks earlier. So regularly checking things like invoices due, money expected to be coming in, upcoming bills or tax payments can help you spot potential problems before they happen. It's not complicated forecasting, it's simply awareness. Cash flow problems rarely appear overnight. They usually build slowly through timing gaps, delayed payments, and expenses arriving before income. Understanding the difference between profit and cash flow is one of the most important financial skills a business owner can develop. Because when you pay attention to when the money moves, not just how much you're earning, you stay in control of your business finances. If you'd like more guidance on building a stable and sustainable business, there are more videos on the channel that help explain these ideas step by step. And if you'd like more support like this, don't forget to subscribe. And well done for taking some time to work on your business and not just in your business with me today.